Welcome. Using this heat map, we utilize the power of over 25 financial metrics to gain a multi-perspective view of the markets, from bonds, stocks, commodities, and Bitcoin. In this video, we'll review the past week's trend movements using our metrics heat map.
For the week ending 4th of November 2023, that's week number 44 on the metric heat map. Starting with the Fed, Chairman Powell signaled that interest rates will be held steady for now in his latest meeting. This provided some relief to markets, as fears of continued aggressive hikes have been weighing on sentiment. In tandem, the Treasury announced plans to finance another $770 billion of debt this quarter. Importantly, they plan to issue much of this new debt at the front end of the yield curve, meaning in short-dated treasuries. This provided a boost to bond markets, as it relieves some of the pressure on longer-dated yields like the 10-year, which serves as a global benchmark rate. The 10-year yield seems to have peaked for now and may drift lower over the next few months. However, medium-term inflation risks still remain, like elevated oil prices around $80 per barrel. Equity markets also bounced back strongly this week, reversing several down weeks prior. Powell's less hawkish tone, coupled with the Treasury's debt issuance plans, improved sentiment. Hedge funds also now have greater access to collateral, which could further support stock markets going forward. In economic data, moderating employment growth indicates a slowdown, which markets took as a positive sign. Slowing inflationary pressures could stay the Fed's hand. The US dollar pulled back as well, signaling reduced hoarding of cash that could find its way into markets. This is another positive for equities. In cryptocurrencies, Bitcoin took a breather, but maintains a constructive outlook. Two key drivers here are the pending SEC decision on a BlackRock Bitcoin ETF, as well as Bitcoin's high sensitivity as an early indicator of easing monetary policy. In commodities, oil paused its climb but remains elevated. Uranium has inched higher on nuclear power demand. Geopolitical tensions continue to underpin the complex, with conflicts still simmering. Safe havens like gold and silver are steady, holding their ground. While geopolitical flare-ups can spike prices short-term, persistent upside movement remains elusive for now. But further escalations in the Israel-Gaza conflict could change this picture. Overall, markets seem to be regaining their footing as the Fed taps the brakes on aggressive tightening. While risks still remain, recent policy shifts provide some cushioning in the near term. If you enjoyed this market update, you can check out the full 2023 heat map spreadsheet in the video description below. Alternatively, feel free to explore the charts on your own. I've obtained a special discounted link for TradingView that's in the video description. That's the end of this week's market summary. Goodbye and see you next week for more market insights.
If you found this video summary useful, please give us a like or consider subscribing. We truly appreciate comments and feedback. That's it for this week's summary. Have a good day.